and revenue growth over the past several years and even last year. The iPhone 5 will sell well at the beginning of this year. We expect that to slow a little bit as the new gadgets do come out. So there should be something new and interesting for people to get their hands on towards the second half of the year, either iPhone 5S or 6. The iPad mini's been a huge success so far.
All right, I mentioned maybe a new handbag, so that brings me to Coach. Now listen, they had a disappointing quarter last quarter. So I'm not really sure what is going on there that is compelling me. Maybe you're better off buying a purse rather than the stock. You're going to tell me otherwise.
Sure. You know, you should buy a purse, but the stock is also a good value, and it's got some room to run to the upside. They've had huge success in China. We expect that to continue. Their luxury line is newer. They just rolled that out last year. It's had good early success. Not a lot of people also know that Reed Krakow, that brand, is also associated with Coach. He's the co-president of Coach and their chief designer of their product. We think they have a very strong product line. Seems like the ladies like it, so we think they'll have good earnings and future growth potential as well.
What about Japan? They invested heavily in Japan. They've got this whole unit there. We have the yen weakening. I mean, isn't Japan going to be an issue and a drag going forward for them?
Yes, they did invest pretty heavily in Japan. However, they're really focused on the U.S. and Chinese markets currently, and I think that'll help them to do very well. They're also diversifying away from men's and women's handbags. They're going to have a ready-to-wear line. They're going to have shoes coming out. And other accessories as well. So they're diversifying a little bit away from their normal product line, and that should add future earnings and growth in the future.
Robert Half International
Sure.
is one of these companies that's in the employment space. I'm trying to figure this space out. I mean, does it do better when the economy is showing better jobs numbers than we have now, or does it do worse? I mean, where's the story in that kind of business?
Sure. The story in Robert Half is really temporary employment. A lot of companies are very cautious about adding full-time employees. So they're able to go to a firm like Robert Half and add, you know, temporary employees, maybe for future full-time employment, but at least they get high-quality workers now, and they can do that through Robert Half. A lot of small and mid-sized companies go to a firm like Robert Half, and that's where they see 80% of their earnings comes from temporary employment.
Well, what if the job market improves dramatically? Does it hurt their earnings?
It shouldn't. They're pretty diversified, but companies will still use, a lot of larger companies also downsize those HR divisions as well. So they're also using a firm like Robert Half to go out and hire people because they don't have the people in-house to, you know, interview and try and figure out if they like the employees or not.